Hi, it's CF Liu again, independent licensed financial advisor in Malaysia. Now here we are still on the lesson of how to maximize your tax relief. How to use your investment to claim even higher Malaysian income tax relief. Now the tax relief normally in that list of tax relief, it needs you to actually spend money, right? Expense money. Spend money for you to actually claim a certain kind of tax relief. But there's only two things that the tax relief does not require you to spend a lot of money. So your money does not disappear. It does not get exchanged with another service or product. You actually still have your money intact, all right, in a very liquid form. Well, maybe not as liquid like putting in your in your savings account, but then there are a lot of benefits from using this what I would call what we call as investment tool. Whatever that is being allocated into this kind of vehicle or tool, it gets you even higher. Not guarantee, but potentially compounding kind of annual return. Potentially, in most cases, not significantly higher, but slightly higher or reasonably higher than putting the money into fixed deposit, right? Like I say, these two Malaysian income tax relief does not require you to part with your money, does not require you to spend it, and of course, rather than putting that in a locker and all that, you could probably want to put that into these two tax relief. To actually maximize this tax relief, you don't actually save 5 figures from paying tax. It means that these two tax relief, if you maximize it, easily it will be in the 5-figure region. So you must have that money that you is lying around in your fixed deposit and all that. And of course you want to have extra more than that, because putting in fixed deposit is really for emergency fund. So when you put into this, I don't consider that as an emergency fund, because it's liquid, is not so straightforward. You can retrieve it like retrieving your money from your fixed deposit. So the first so-called investment you can do, it's actually very broad it's for everyone. Whether you are 20, 30 or 40, I think this is applicable for you, and this is called private retirement scheme, which is up to 3,000, right? 3,000. Now private retirement scheme, links below if you want to check out about it. By this time you would have known that it's like your second EPF, but the money actually is not managed by EPF. It's or this so-called private retirement fund provider is like a unit trust fund. But it is packaged as what I call a private retirement fund, which is a government initiative, private pension administrator (PPA), and this serves as a second EPF. And but it's not managed by the government. It's a government initiative, like I say. It's managed by companies like insurance company like AIA and all that, and from this asset management company, normally bank related like RHB, some fund like Kenanga. Affin Hwang. So they have different funds. They have a few kind of flavor of this private retirement fund under all these providers. So the maximum is 3,000 per year, and it seems like it's only until 2021, from 2012 to 2021. And I hope they actually extend that. Right now, the thing is, if you only save 3,000 for your so-called retirement, I don't think that is enough. I think the concept is good to actually start this as a government initiative, but I don't think it's hardly enough, right? And even they say EPF is hardly enough, because not every private retirement fund or scheme make the same. So to really compare between funds and between do apple to apple comparison for the fund of a different risk profile, to compare between different companies, different private PRS provider, you might want to check out in the link in description, like a platform that independent advisor like us are using to manage client investment. It's an iFAST platform, and there you can actually compare most, not all the private retirement scheme funds available to Malaysia, and you can compare things like historical performance for the past 5 years. You can compare like what are the upfront charges and all that. Links in the description. So this is number one, and this is considered like unit trust investment in Malaysia that is eligible for tax relief, right? Normal unit trust is not eligible for tax relief, only this private retirement scheme. A unit trust that is packaged and classified as a private retirement scheme. Now the second in Malaysian income tax relief under this investment, which I think you can only park away this money, allocate that, and it doesn't disappear, is what I call is a net savings in SSPN. SPN is another term for PTPTN. That means that you have to have an account under SSPN or PTPTN. Now that means that to really execute on this tax relief, you have to be a parent with a children. So you can have multiple accounts for your children, but it's capped at, it used to be like 6,000, but I think in 2018 2019 they actually increased the tax relief to 8,000. So that's why I say this 8,000 already, and then plus the PRS tax relief, you can easily hit like 4 figures, right? But PTPTN and SSPN, it doesn't mean that you actually borrow money, but the pool is the same. Basically you actually contribute, open your own account, and you use this vehicle. You're not actually lending money to PTPTN or other students. You're actually opening your own, for your kids, your own education savings account in the form of SSPN or PTPTN. Now, the fund, the PTPTN, historically it has give about 4 to 5%, is around that ballpark per year, which again, nothing like an impressive kind of return, but still there's a margin there higher than FD. So it's mostly it's stable, it's consistent. So if you really start early, for example, if you start your child at 3 years old and there's another 15 years before he actually go to university, right? So you know that if you save like even contribute like 8,000 per year, and you are eligible for tax relief out of that, if you are in a 24% tax bracket, for example, you actually pay 2,000 less in tax, or you actually get 2,000 more tax refund from Lembaga Hasil Dalam Negeri, which is really a good deal. But on top of that, this 8,000 doesn't vanish into the thin air. 8,000 you just multiply by 15 years, easily you have 160 over 1,000 in 15 years, and that is assuming 4% per year kind of compounding. Now perhaps at that point of time, children education funding might not cost that little, but at least it provides you with some baseline, some basic education funding, and having that is always better than having none. Now about the return, 4% or something, make your own judgment. I have no comments on that. But end of the day, like I say, this is considered what I call an investment, very stable, very consistent, not supremely high, but still very useful. So that is if you need a lot more details on how to actually fund your children education and all that, so I have a video or lesson on that. So look out for things popping up on the upper right hand of this lesson. That you might find that interesting. So that being said, if you like this video, find this valuable, hit like on the like button. Just press on the like button and subscribe if you want to see more of these lessons. Comments below if you have any. I check my comments every day. Now if you stay until the end, you will be redirected to another lesson. You have to click on another tax relief lesson that is come in this series. Or if if investing is your thing, you're already a property or stock investor, then you'll find that it's very consistent to get kind of consistent return from your investment. I want you to check out what I call the best consistent dividend investment with a return rate that actually matches EPF. Anywhere in Malaysia or anywhere in the world, this asset class, it does not require you to do a constant monitoring, which is good because most people don't have time, and you don't have to do like stocks day trading, and it's not as much effort or huge capital or time consuming for your traditional property investment, but it's property correlated. You definitely want to check out this lesson because it's one of our highest view and most popular lesson all time in CFLiu channel. So I don't want you to miss out on that. If you miss out, too bad, but this is your chance to actually check that out, besides actually consuming my tax relief lesson in this entire series. That being said, I'll see you in another lesson.